In the business world, some companies like to play it safe. They make these little tweaks, small adjustments, just to keep up. And then there are the ones who decide to burn the boats. They bet everything on one massive, risky move that's either going to be a legendary success or a total, spectacular failure. And today, we're diving deep into the story of one of those companies. So just think about this for a second. What if a really successful, well-known tech company, a leader in its space, suddenly decided that its future wasn't online? That in this day and age where everyone is scrambling to be more digital, their path forward was offline. It sounds absolutely crazy, right? To just toss out your digital playbook and go all in on physical brick-and-mortar stores. Well, that is exactly what's happening right now. So let me introduce you to So Young International. For years, these guys were a huge deal in China's medical aesthetics industry, non-invasive stuff like laser treatments. They ran this giant online platform connecting people with clinics, but they've made this incredibly radical pivot. They've decided their future isn't online anymore. Instead, they are literally becoming the very thing they used to just list on their website, a massive nationwide chain of physical clinics. They are going from clicks to bricks. So the big question is this massive gamble working? Well, the first signs aren't just good, they're explosive. Okay, let's get into it. Just look at this number. In the last quarter of 2023, the revenue from their brand new aesthetic treatment services just shot up by over 205% year over year. That's not just growth, that's a signal that they have hit on something huge. And this new business, it isn't some small side project. For the very first time, the money coming from their physical clinics now makes up 54% of the company's total revenue. In hardly any time at all, this huge bet has become their main business, completely changing who they are as a company. And how they do it? With pure speed and scale. By the end of 2023, So Young had already opened 49 physical clinics. 49. That insane expansion officially makes them the largest laser medical aesthetic chain in all of China, just based on the number of centers. They didn't just step into the market, they kicked the door down. And this whole transformation has just pushed the entire company to new heights. Like the CEO, Sing Jin, said, it's led to the company's highest quarterly revenue ever. So on the surface, this looks like an absolute genius move. But like with any high-stakes bet, there's always another side to the story. Because this incredible, lightning-fast growth, it hasn't come for free. In fact, it's come at a very, very steep cost. See, while all the focus and all the money was being poured into building this new clinic empire, So Young's original business, the one that made them successful in the first place, well, it started to crumble. Revenue from their online services dropped almost 27%. Medical product sales fell by 20%. And their other services, they plummeted by over 40%. It's like the old ship is sinking while they're desperately trying to build the new one. And this brings us to the bottom line. Despite those record-breaking revenues we were just talking about, the company actually posted a net loss of over 108 million Chinese yuan for the quarter. All that growth, all that expansion, it's not profitable. At least, not yet. So you gotta ask, where is all the money for this coming from? Well, they're burning through their savings to fuel this crazy expansion. The company's cash on hand dropped by over 300 million yuan in just 1 year. This whole strategy is a race against time. Can they get to profitability before the cash just runs out? Now, So Young's management, they know this. They are keenly aware that the clock is ticking. They get that they can't just grow. They have to prove this whole new model can actually make money. And that brings us to their game plan for 2026. They're calling it the dual engine strategy. For the past couple of years, the mantra was simple: scale first, grow, 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 no matter the cost. But now, the focus is changing. 2026 is all about finding a balance between that growth and a relentless focus on being efficient and, maybe most importantly, profitable. And this isn't just some vague corporate talk. They have a concrete 3-step plan. First, they're going to be smarter about how fast they open new clinics to ease some of that financial pressure. Second, now that they're the biggest chain in the country, they're going to use that power to get better deals on supplies. And third, they're going to get smarter with their promotions to attract customers who will stick around, not just chase quick sales. But here's the kicker. Make no mistake, balancing growth does not mean they're slowing down. The company has flat out said they plan to open at least 35 more clinics this year. They are trying to tighten their belt while flooring the accelerator at the exact same time. So when you put this all together, what do you get? You get one of the most fascinating and, honestly, high-stakes business stories playing out right now, in real time. On one side of the coin, the reward is massive. We're talking market leadership and explosive growth by completely reinventing themselves. But on the other side, the risk is, well, it's existential. Burning through cash, stacking up losses, and letting their original business just wither away. And that leaves us with this one final huge question. In an era where literally everyone is talking about moving online, So Young is betting its entire future on physical stores. They are zigging while the entire world zags. Is this bold, counterintuitive, and incredibly risky bet on bricks over clicks actually going to pay off? We'll have to wait and see.